Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the often confusing world of business filings. And today we are plunging into the latest report from Artificial Intelligence Technology Solutions, Inc. This is a current report on Form 8K, filed to announce significant company updates. The headline here is the press release from July 15th, 2025, talking about growth in recurring revenue and positive cash flow expectations. And stick around because we'll break down what that actually means for investors and the direction the company is heading. Before we dive in, if you want more of these straight up, no fluff analyses of important company news, make sure you're subscribed. Also, we have a great community over on Discord to discuss all things finance, and you can find the link in the description below. So the big news dropped on July 15th, 2025, and it's all about their subsidiary Added and its performance. The company is basically telling us that things are looking up specifically with their recurring revenue line, which is often a really healthy sign for businesses, especially in the tech space. Let's clarify who we're talking about. When they say the company or we in this report, they're referring to Artificial Intelligence Technology Solutions, Inc. or AITX, and any companies they own. It's important to remember that these companies often work together under one umbrella. The main event in this filing is what's called Item 202, which is all about the company's financial results and overall condition. They're telling us they're about to release a press release, and they've included it with this report to give us a peek at how they're doing. And that press release, Exhibit 99.1, is the key piece of information here. It specifically highlights growth for their RAD division, which is a significant part of their business. Recurring revenue means that customers are paying them on a regular basis, which is fantastic for predictable income. Think of it like a subscription service where you know money is coming in month after month. This is a lot more stable than one-off sales. Then we have item 8.01, which is for any other significant events. They've basically said that the information in item 202, which is that press release, is also relevant here. They're making sure all the bases are covered in case this financial update also counts as some other important announcement. Now, this next part is a bit of legalese, but it's important to understand. When they say the information is being furnished and shall not be deemed to be filed, it means they are providing this information, but they're not quite making a formal promise or guarantee about it in the same way they would in other types of filings. It's a way for them to share positive news like the growth in recurring revenue without immediately opening themselves up to certain legal liabilities if some detail isn't perfectly precise. They're essentially saying, here's some good news, but we're not officially on the hook if every single number isn't exact to the penny in this specific filing context. It's a common practice for companies wanting to put out press releases related to financial updates. And the main exhibit, 99.1, is that July 15th press release. This is where the nitty-gritty details of their financial narrative are supposed to be. While this 8K filing itself doesn't contain the full financial statements in great detail, it points us to this press release as the source of the key figures and the story they want to tell about their performance. Interestingly, the report also indicates that there are no specific classes of securities trading on a particular exchange under a particular symbol that are directly related to this filing category. This often means the core business activities being reported on here might not be directly linked to specific publicly traded securities in the way one might expect for larger, more established corporations. It suggests a more focused or perhaps more specialized part of their business is being highlighted, and in terms of the title of each class of securities, it's also marked as NSE. This reinforces the idea that this particular report is focusing on operational updates and financial expectations rather than a broad listing of all their securities. It's a bit like looking at a specific report card for one subject rather than the entire transcript. A quick look at their incorporation tells us they are registered in Nevada and have a commission file number and an IRS employee identification number. This is standard corporate paperwork confirming their legal structure and identification. Nevada is a popular state for companies to incorporate due to its business-friendly laws, but it doesn't necessarily reflect where the core operations are actually happening, which in this case is Michigan. Their principal executive offices are located in Ferndale, Michigan. This tells us where the main brain of the operation is located, the hub from which their AI technology solutions are managed and directed. And finally, the report is signed off by Stephen Reinhardt, the Chief Executive Officer. This means he's officially endorsing the information presented in this filing. As the CEO, he's the primary person responsible for the company's strategy, performance, and public communications. His signature confirms that the company stands behind the claims it's making in this report, especially concerning the growth and positive cash flow expectations. Now let's talk about what this all really means. The emphasis on recurring revenue growth from their RAD division is the core message. Recurring revenue is gold in any business because it provides a predictable income stream. This makes it easier for companies to plan, invest, and grow without the constant worry of where the next sale will come from. For AITX, seeing their RAD segment achieve this suggests they found a successful model, likely with clients signing up for ongoing services or product usage. This is a strong indicator of customer satisfaction and a sticky product or service. The mention of operational positive cash flow expectations is equally important. Cash flow is the lifeblood of any company. Positive cash flow means the company is generating more cash than it's spending. This cash can then be used to reinvest in the business, pay down debt, or even return money to shareholders. When a company expects positive cash flow, it signals financial health and operational efficiency. It means the business is not just making money on paper, but is actually bringing in real cash from its operations. However, it's crucial to remember that this is a current report that points to a press release for the details. The 8K itself is brief. The real substance, the actual numbers that quantify this growth and these expectations are in that press release. Without seeing those specific figures, the percentage increase in recurring revenue, the projected cash flow amounts, and the timeline, it's hard to say with certainty just how significant this positive update is. While the language is optimistic, it's always wise for investors to look beyond the headlines and press releases. We'd want to see the actual revenue figures, the costs associated with generating that revenue, and the concrete plans for managing that cash flow. Is this growth coming from new customers, or is it an increase from existing ones? What are the profit margins on this recurring revenue? These are the kinds of questions that a deeper dive into the full financial statements would answer. Despite these questions, the direction is positive. Focusing on recurring revenue and positive cash flow are fundamental strategies for building a sustainable and valuable business. If AITX, particularly through its RAD division, can continue to build on this momentum, it could lead to greater financial stability and potential for expansion. The risk, of course, is that the underlying service or product might face increased competition, or that customer retention might dip if the value proposition weakens over time. But based on the information in this filing, the immediate outlook for these specific operational areas appears to be on an upward trajectory. What's your take on these positive signals from AITX? Do you think the focus on recurring revenue is a clear path to success for the company? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more in-depth analyses of corporate filings. And don't forget to join our Discord community for continued discussion, linked in the description. Thanks for watching, and I'll see you in the next video.